Everybody, Brian Shannon here from alphatrends.net. Today is Friday, June 6, 2014. Hope you had a good week. It was definitely a good week for equities. The S&P 500 up about 1.5%, as was the NASDAQ. The Russell 2000 did finally play some catch-up and is back to positive year-to-date with its 2.7% rally this week. And that's something that I'd outlined Wednesday afternoon in a blog post, actually on StockTwits, saying that I thought if it got above 112.55, it had a good chance to be able to continue to move higher, take out the volume weighted average price year to date. That's the purple line. We'll talk more about that in a moment. Let's take a look at the S&P 500. You can see we're looking at a 10-minute chart, meaning each candle represents 10 minutes worth of trading data, and we've got about 12 days worth of data on here. This moving average is a 5-day moving average, and as I always say, the intermediate term trend is considered innocent till proven guilty while we're above a rising 5-day moving average, and that to try to sell short with a rising 5-day moving average should only be done by the most aggressive traders, and you should have very low expectations as far as the potential for outcome of success in that scenario, because again, the path of least resistance is higher, and picking a top is one of the hardest jobs there is on Wall Street, and a job that has put more people out of business than a lot of other strategies besides maybe picking bottoms. So the shorts have certainly had it difficult with this market, and no one should feel sorry for them because they're fighting the primary trend. The primary trend is obviously higher. People were calling this a triple top back in here a year ago, which is obviously foolish. It was just a level of potential resistance, but we continue to march higher. We're above all the rising moving averages. A couple weeks ago, we had the potential of a failed move leading to a fast move lower, but the buyers took back control, maintained that control, and we are seeing that the markets do continue to move higher. We are extended in the intermediate term, but again, that doesn't mean extended doesn't mean sell short. It means, perhaps the market needs to consolidate a little bit through time, or perhaps the pullback in price, but there's really not a lot of advantage to being short with a rising 5-day moving average. The NASDAQ also had a good week. As we said, this NASDAQ was up 1.65% this week, and here we can see that it's just a real nice uptrend. We took out these highs and consolidated here very nicely through time. The market digested those gains, so people were foolishly calling this a double top as well. And I say foolishly because a double top is only known after the fact, like most things. A double top you would have occur like this, and the top, the double top portion isn't completed until it takes out this level right here. So that would be at this point that you could officially call it a double top. Go look at Google this weekend and type in double top, because this is just an area of prior resistance. It doesn't mean double top. It's really amateur foolishness that people call it that. And anyways, forget about the labels so much. What's more important is the fact that we're in an uptrend. That's the most important label you can put on this market, is that we're in an uptrend. We're making higher highs and higher lows. We're above a rising 40-week or 200-day moving average, and that's where we found support, just above that rising 200-day moving average 3 or 4 weeks ago, and now we continue to move higher. So we consolidated through time. We were observing in alpha trends the 90.5 level as being the most important area for this market to hold above this week, and that as long as it maintained above that, we were saying that it made no sense to be short except for maybe very aggressive day trades. So the market resolved itself back to the upside, took the short sellers by surprise, and the Russell 2000, like I said, it was 112.55 that I said I thought needed to be cleared for the buyers to regain control. I was talking about, yes, we have a declining 50-day moving average, but this low here at 111.11, as long as we held above that, and we had, which is where we saw the rising 20-day moving average as well, that I thought it was most likely that we would get back above the volume weighted average price year to date. So what we saw was that we saw this higher high and then a higher low right here, and then this higher high confirmed that we were in fact moving higher once again. So real nice profits in the Russell 2000 this week, and now we see that this market has now retraced a little bit more than 2/3 of the year-to-date range, and that would qualify as a reversal. So people are still probably looking for a place to short the Russell 2000, and certainly we've had a good run this week from 111 up to 116-ish, and this is a prior area of support that may offer resistance this week. But right now we can't say that it is resistance. We don't know till after the fact. So what we want to see is, how does the market continue to move? Does it continue to make these higher highs and higher lows? Is it holding rising volume weighted average prices, etc.? And as it gets to this level, be aware that there's a potential for resistance, but you only want to sell short as the market is turning away from a level of resistance and if it's below a 5-day moving average, which is declining. So we saw the market reverse higher today. It took a lot of bears off guard, and the path of least resistance in the intermediate term is higher in the Russell 2000. Semiconductors have continued to march higher. As we know, a couple weeks ago, they were testing the volume weighted average price year to date. It seemed as though a breakdown was coming with these lower highs, but we didn't get short because we were still holding up above support, and the market rallied back up, and we got more positive on the semiconductors over here, saying that it looked like they were going to new highs, and that's in fact where we are, is at new recovery highs here in the semiconductors, highs not seen for 10 plus years. The financials also had a good week. They broke out. We were talking about the 2215 level as being 2210 to 2220 as being the key level. This has been the band of resistance. We had held it towards the end of last week, and then towards really Tuesday and Wednesday of this week, we started to take off from that level. The 5-day moving average was advancing the entire time, so we were considering it innocent till proven guilty, and we've got a pattern of higher highs and higher lows. If we pull back down to the 5-day moving average, there would be a good day trade, short-term opportunity for shorts, but you're fighting a trend that's been in existence for 3 years, and it simply isn't going to provide big opportunities on the short side. So focus on waiting for the low risk entries on the long side in these markets. Shares of Apple split on Monday. They'll be trading at a seventh of the price, so about, what would that be, $95 a share or so, 90 whatever it is. But anyways, the stock's going to be splitting 7 for 1. It's quite extended here, but again, same story. We've got a rising 5-day moving average. We dipped below it slightly this week, but that wasn't a reason to sell short. We want to sell short in the intermediate term if we see resistance at a 5-day moving average, and the 5-day moving average turns lower. So we've still got a strong uptrend in here. The stock is getting extended, but perhaps we are going to get to that 700 or what will be $100 level quicker now. As far as some of the other big names go, Twitter had a little bit of a bounce this week. Nothing really to be excited about. We spoke last week about how it was trying to find support at that 5-day moving average. It continued lower in there, but right now what we want to look at is the volume weighted average price. One, since this gap lower over here, we're holding above that, so that's good to see. And then since this gap, we can see that we're basically right on that as well. So that, Twitter is really becoming more neutral maybe than anything, but the primary trend is still lower. I'm not saying that it can't make for some good opportunities, and in particular, we've got some resistance near about 35. If we can break above that, perhaps we go in to fill this gap, but it's still in a primary downtrend overall, so don't be too aggressive getting long in that one. Gold continued, I guess, a little bit lower here this week as well. That was down, it was up for the week, up 0.14%, so up slightly, but it's still in a downtrend and really no advantage to trying to be long in there. I wouldn't be surprised to see us test these lows down near 114, and finally, as I mentioned, the bonds had sold off a little bit. They've had a really strong rally here lately, and they've pulled back down to this trend line in the 50-day moving average, so technically we're still in an uptrend in bonds, and selling short there doesn't make a whole lot of sense except for from some shorter term trades. That'll do it for me today. Have a good weekend. Thanks for tuning in.